Hello everyone, welcome back to Bharat FinTech. If you're new here, don't forget to hit the subscribe button for weekly insights into investing, finance tips, and the latest IPO updates. Today, we're diving into IPOs, or initial public offerings. IPOs are an exciting way for companies to raise capital, and for investors like us, they can be an opportunity to get in early. But not every IPO is a good investment, and it's easy to get caught up in the hype. So, in this video, I'll walk you through 5 simple steps to help you evaluate any IPO and decide if it's worth your hard-earned money. The first step in evaluating an IPO is to understand the company's background. Who are they, what do they do, and why are they going public? For example, look at what the company's core business is. Do they have a unique product or a strong market position? Also, take a look at the management team. A solid, experienced leadership team often means the company is in good hands. If there's been a lot of turnover in leadership or if the company has been involved in controversies, those can be red flags. So, it's crucial to do a little digging into the company's past to see if they're stable and trustworthy. It is all about the company's financial health. This can sound a bit complex, but here are a few basic things to check. First, look at their revenue growth. Are they making more money each year? Or are they struggling to grow? Consistent growth is usually a good sign. Next, look at profitability. Is the company making a profit, or are they still in the red? Some companies go public while still unprofitable, so be cautious. Finally, check their debt levels. A high debt-to-equity ratio might be risky, as it means the company owes a lot compared to what it owns. These numbers are often available in the IPO prospectus or on finance websites, so it's easy to find even if you're just starting out. The third step is to evaluate the industry and market potential. Essentially, you want to understand if the company operates in a growing industry. For example, industries like technology or health tech have been growing rapidly in recent years. Also, look at who their competitors are. Does this company have a competitive advantage or a unique offering? High competition can make it difficult for a new company to thrive, so knowing their position within the industry gives you insight into their future growth potential. Step 4 is about understanding the IPO pricing and valuation. When companies go public, they set an initial price, often based on future potential and market interest. But sometimes, companies can be overvalued. A helpful ratio here is the price to earnings, P/E ratio. Compare this company's P/E ratio to others in the same industry. If it's significantly higher, it might be overvalued. Of course, not all IPOs have a P/E ratio if they aren't profitable yet, so this isn't a one-size-fits-all approach. Just remember, don't get too caught up in the excitement if the price doesn't match the fundamentals. Finally, let's talk about risks and growth prospects. Investing in an IPO is always a bit of a gamble, but it's smart to identify some key risks. For example, check if the industry faces regulatory risks, like fintech companies dealing with government restrictions, or if the company relies heavily on one market or product. Any shift could impact their revenue. Also, think about future growth. Is the company expanding into new regions or launching new products? These growth moves are positive signs that they're planning for the future. Now we will take a look at a recent IPO Swiggy and apply these steps. Start by examining the company's background and leadership. Then, check their revenue growth and debt-to-equity ratio. Compare their position in the industry. Evaluate their pricing and P/E ratio. And finally, potential risks and growth opportunities. To wrap it up, here are the 5 steps to remember. Look into the company's background, check their financials, understand the industry, evaluate the pricing, and assess the risks and growth prospects. IPOs can be exciting, but they also come with risks. Always do your research, and don't invest just because there's hype around a new stock. By following these steps, you'll have a better chance at identifying a solid investment. If you found this video helpful, please give it a thumbs up, subscribe to Bharat Fintech for more insights, and drop a comment if there's an IPO you're interested in. Thanks for watching, and happy investing.